Hey everyone, hopefully you're having a good day. My name's Andy. My channel's Finding Value. Today we're going to go through Twitter like we normally do. I'll interject my financial opinions, generally related to three different topics: wealth building, commodities, and/or financial topics. Let's dive right in, take a look, see what's going on today. If you want to follow me, it's at @Finance. If you want to join our community, finding-value.com, where I dive deeper into all these topics, subjects, sectors, looking for investment opportunities and sharing those opportunities with everybody in the community. I do that mainly through two channels. I do it through the midweek update, which I do in the middle of the week, and then I do Q&A sessions on the weekend, which I also share my opinions on what's going on in the markets. If you need help with anything related to this commodity bull market that we are in, definitely try it out. Special is a coupon code that you can try it out. You get a 50% discount on the first month only. It's a $25 discount. And you get a $100 discount on the yearly membership if you'd like to swap from a monthly to a yearly or go directly into a yearly. SVP operations, we've got oil equities holding up pretty well among this pretty significant oil price drop in recent days. Such a change from the 2016-2019 days when a minus 5% move in oil would result in a minus 25% move in an oil stock. That's the difference between a bear market and a bull market. We are in a bull market, but we are in a correction in the bull market that hasn't necessarily ended for the actual oil price. Now, the equities are the stocks that trade oil and gas, like the oil and gas producers, the energy service companies. They've already bottomed. They are heading higher. And people are accumulating those stocks irrespective of what the oil price is doing. That's called a bull market. They know what's coming. And everything else is just a diversion. And that's why we're seeing all of the commodity space get accumulated. Some people will say, well, it depends on the supply demand dynamics. It depends on oil prices. Oil prices lead the equities, some people say. That is not the case. Oil hasn't really moved that much, and the equities are leading oil price. If you go look at some of my favorite equities, they have broken out of their patterns and are already heading higher. Some of them are up an okay amount this year. So I would be real careful who you're listening to. Be real careful on the dynamics in the market where some people say, well, the commodity leads. That's not what's happening. That just isn't what's happening here. So what I'm seeing, this is what I see, and I'll yank it up here. Canadian crude. We are squeezing into a corner. This is a double bottom breakout retest. And people are accumulating this retest. Do you know why they're doing that? Because technically that's the best time to accumulate. Then we are going to use this. As you can see, I even got the numbers there. We are going to move up in a zigzag pattern. 1, 2, 3, 4, and then 5 will be up here. And it will do a pattern similar to that. That is what is ahead of us. How do I know that? Well, I don't 100% know that. I can't say with 100% certainty, but I can say historically, that's how markets move. And with oil being with gold being our leading indicator and gold ripping, more than likely crude oil is going to follow behind it. It's just lagged, and it depends on the market conditions. If we get a slowdown in the market, which I think we're going through, that's why crude oil's been chopping sideways. That's when gold and silver take off. Then we'll see platinum break out, which it did. Platinum's already broken out. Crude oil is going to follow very closely behind it. So it's all coming, guys. It's all coming. it's all coming. Gary Boehm says, while the mainstream financial media remains fixated on the daily gyrations of the stock market, the world's central banks are quietly and methodically accumulating physical gold at a historic pace. They are the ultimate insiders, the smart money that understands the fragility of the current system. Their actions speak louder than words, and their actions are unequivocal. They are slowly dumping sovereign debt and buying gold. Completely 100% correct. Interest rates going up is sovereign debt getting dumped. And when rates continue to go higher, it will impact the stock market at some point, in my opinion. I don't know when that exact point is. When that occurs, money is going to get funneled into less and less options. Precious metals is one of those options, and commodities and the commodity equities are the other options. I also think that we'll see emerging markets and some of these international equities do incredible things. Incredible things. And we're seeing the currency exchange rates support my opinions there. So if you look from the inside of the market out on how people are positioning, like for instance, I know we've got this Canadian crude ticker that's going to do this. That is evidence of money rotation for an emerging market, bull market, precious metals bull market, commodity bull market. They all move together. You can also look at the Canadian United States dollar, and that's also in a falling wedge. This was the last bull market, and this is going to be the future bull market when that breaks out and moves. You have to use patterns and accumulation to get and front run the herd. That's how you front run it. And that's what I'm doing. That's what I'm doing right there on the website is I'm front running the herd with patterns. And I'm trying to be the smartest of smart money. I'm literally trying to buy the bottom of the bottom of companies as best as I can. It doesn't mean that you'll be successful and get the bottom of the bottom, but that's something that I'm striving for. That's what I want to do. So I purchased my silver massively already. I've done platinum. People were giving me crap about platinum. It hasn't gone up for 14 years. I can't remember. I can't forget that comment. And I'm like, well, that's why I'm buying it. So here's another funny thing, just to chat with everybody here. Here's a funny thing. The very reason that most people are not buying a stock is the same exact reason that I am buying the stock. How can we have the same reasons and come to two opposite, completely different conclusions? So someone might say, well, no one's accumulating that. That's exactly where you accumulate. You accumulate when no one else is looking. You buy it when the pattern is good. You buy a sector that has been out of favor for a decade plus. That is why it is the risk is so low because no one owns it. If no one owns it, no one sells it. If no one is selling it and no one owns it, it's completely dried up. That's the desert I want to be in. I want to be where there's no buying and selling pressure necessarily because it's out of favor and low. And I'm over there accumulating it because it's like, who else is going to be in this thing? Who's going to sell it? No one's going to be selling this in mass. And, if there's a market sell-off, yes, fear can cause selling pressure across the board. But a lot of the times people it's like all they care about is price movement. Once you figure that out, once that is in the frontal lobe when you're making decisions, you're like, wait a minute. Well, why don't I just look for patterns and buy things where people aren't looking? And then use the three-pillar approach that I've developed to make sure that whatever you're accumulating is, in fact, cheap. And that's all you got to do. You just go around buying crap that nobody wants to buy and waiting for them to want to buy it when the price starts moving. That is literally the entire stock market. It is that simple. What makes it difficult is that people don't have conviction. They want to sell for price movements that are down. They get scared. And that's an emotional personality thing. Once you conquer that, and once you conquer the herd psychology of not following what everyone else does, once you can stand alone on your own thoughts and opinions and reject the herd, which is very difficult to do. It is very, very difficult to do. Everyone is brought up to be a part of the herd. They want to fit into society. They want to wear the clothes that people accept. They want to have the behaviors that their parents, grandparents, friends' parents, that they all accept. And everything that they have done all through school and growing up is becoming part of the herd. And what I'm telling you is to do the exact opposite, which is very difficult because your entire life you've been bred, you've been trained, you've gone through school to be like everyone else. You know, it's kind of ironic. They tell you to go to college, and then you go to college, and what does college do? They put you through a training program where everyone else around the world, similarly, if you go through an engineering, course or curriculum, they all learn the same thing. And then you compete against each other after going through school, all learning the same thing. What makes you that different? The one that is different in investing and the one that can successfully see the market for what it is and to see the herd move, that is how you gain success. You gain success not by becoming part of the herd, but by seeing what everyone else is doing that's the same. Basically seeing how the herd behaves and where it moves and how it acts. It's a very psychological game. And then the chart patterns is just an imprint of the psychological herd. And then the ratios just keep you on the cheap side. Market cycles, it just cycles back and forth. And that really is just money flows going from one sector to another sector and back. That's what market cycles are. And it's the herd just chasing its own tail back and forth, which is just chasing price performance. That's all it's doing. Gold predictors, platinum to gold ratio has rebounded from historic lows and is testing the 0.45, 0.5 zone. This range is likely to mark the start of platinum outperforming cycles against gold. It is, and that also is a sign of changing market conditions. When platinum outperforms gold, the stock market underperforms. When gold outperforms platinum, the stock market does very well. There was a study done, and I think it was either Yale or Dartmouth or one of those schools. They did a study and on this ratio, in fact, and their conclusion was when platinum outperforms gold, the stock market generally underperforms the historic average. Make gold great again. It says if there's a failure to deliver silver, it might be at 55 or something, and you wake up the next morning and suddenly it's above $100 or $80. I was talking about that earlier. I wonder if he's listening to the channel. Mike, if you're listening, give me a thumb up in the comment section. In a currency crisis, market crisis, overbought conditions, it all goes out the window. None of that matters. Totally agree. Totally agree. Like, we've got the biggest pattern with the biggest short squeeze. Think about that for a second. The way to become successful when you've got those types of conditions that are present is you just sit. You sit, you wait, and you just see what happens. Because if you try to trade it and you get out of the market and it does something like that, how do you get back in? What if today it's $50 and tomorrow it's $100? Are you going to go back in? Are you going to buy it? How are you going to handle that? I can tell you what I'd do. I'd go crazy. What I'm going to do is I'm not going to sell it. Not going to sell it when we're in a big advancing phase. Oh, but you could get a pullback. I don't care about the pullbacks, guys. I am more afraid of missing the move to the upside than I am of a 20% pullback. And I don't think there's a lot of people maybe that think that way. Bloomberg reports unprecedented tightness in precious metals. London stockpiles are dwindling. Multi-year deficits are piling up. Lease rates, usually near zero, have exploded. So platinum, palladium, and silver lease rates remain elevated. What does that signal? Physical tightness. Markets have seen persistent tightness this year. Now, here's the crazy thing. What if we're at the beginning of the bull market? Well, what does that mean in the middle? What does that mean at the end? What does that mean if people actually try to buy the physical crap? Are these lease rates going to spike to the moon? I have no idea. But I think we're at the beginning of the bull market. Like maybe not the beginning of the beginnings, but we're at the beginning of the advancing phase where we really start to move. And all these lease rates, I think, are going to get a little bit hairy here. Gary says many mining companies are still valued by the market as if gold were trading significantly under $3,000 per ounce. This creates a massive disconnect between fundamental value and market price. When analysts eventually update their models to reflect current gold prices, and they will and have to at some point, the resulting price target increases will drive additional significant stock price appreciation beyond what has already occurred, which I totally agree with that. Now here's a scenario. You see the lease rates up here, right? They're all kind of going up quite a bit. Now, what if physical gets really tight? I have noticed because I am a physical buyer of precious metals. When I go and I look and I peruse, I peruse some of these sites. It looks to me like they don't have a lot of stuff in stock. Platinum is getting a lot more scarce. Palladium is getting more scarce. And at some point, what if they just don't have it at all? What if there's nothing to buy physically? What do you think people are going to do? You think they're going to go buy mining stocks to get basically exposure to platinum, palladium, silver, and gold if you can't buy the physical? I don't know. I mean, that seems like a logical conclusion to me. So while they're undervalued compared to financial metrics at $3,000 per ounce and so forth, what if the physical side gets super tight where you just can't get the dang stuff? I don't know. I mean, it's getting tighter and tighter is what I'm seeing. And I'm sure the premiums are going up too. One thing I noticed on some of the metals, like platinum and palladium, the premiums were like 40, 50, 60, 70, $80, right? Somewhere in that range. I think the premiums have gone like to $100, $140 on platinum and palladium, depending on what you're looking at, like 1 ounce bars and stuff like that. So I think the premiums are starting to go up too, along with the price. The average price of silver in 2015 was $15.68 an ounce. Investing wisely takes a long view. Oil presents a similar opportunity today as silver was in 2015. I like the long-term view, guys. I like what these guys are saying. I think oil is a ridiculously underpriced asset. We could be low for 25 and 26, and then bottom in 26, maybe early 26. Could be, maybe not. You know, the better, the best strategies that I have found work when you don't have to make price predictions. And they keep you on the right side of the cycle. And that's really value. It's value investing. So you avoid overvalued stuff, so you avoid market tops, and you buy undervalued stuff, which means you're always in the bottom of the market. Because the value is only good when you're at the bottom of the market. So it keeps you on the right side. So yeah, oil is ridiculous. It's a fantastic opportunity. And a lot of people they're sharing the cup and handles. These things are going around. They're floating around everywhere for silver. It says not only is silver completing the 45-year cup and handle, is also attempting to break out of a 50-year one channel or 51-year channel on its way to $500 plus an ounce. Expect one or two market corrections of about 40 to 60% along the way. You don't need to try to trade it. Just add on the pullbacks and understand they act as springboards. So that's true. We could get some consolidation pullbacks along the way, and all you have to do is just wait it out. Wait it out, because you know what? We are in a bull market. We are in a bull market. We have a housing unit shortage by state. I was finding this kind of interesting. 1.6 million housing market shortage in California. That's pretty steep. 175 in Colorado. Not too much in Wyoming. Only 1.9 thousand. 344,000 in Texas. 300,000 in Florida. New York, 600,000. About 100,000 in Minnesota. So this is the shortage. So we do have a shortage. There's no surplus in housing unit shortages. Warren Buffett, the trick in investing is just to sit there and watch pitch after pitch go by and wait for the one right in your sweet spot. And if people are yelling, swing you bum, ignore them. What does that mean? It just means keep a watch list, find some companies that you like, and only swing at them when there are good opportunities. I'm trying to get as good as I can at implementing and practicing this. When the technical charts are set up, when a company is there and it's cheap, and I buy it right at what I would consider to be one of the ideal locations. Those locations can be there for a few months, a few weeks, could be there for 6 months. You don't know. And you can buy them way undervalued at a very good technical entry, and you just sit. You sit after too. You sit, you wait, you get the opportunity, you buy it, and then you sit and wait again. When to sell a stock? If the job has been correctly done, when a common stock is purchased, the time to sell it is almost never. Now, I think you're talking about companies that do well over long periods of time. So the Coca-Colas, the banking stocks, the insurance companies, stuff like that. Other more cyclical stocks like technology stocks and perhaps commodities and stuff like that, you're going to have to sell it at some point. Oil is the cheapest it's been in the last 70 years when denominated in gold, with the exception of the C-19 lockdown in 2020. That's correct. The cheapest it's ever been. That's a very good opportunity here for oil. Another one. So oil headed to $400 in this commodities bull run. Looks like people are starting to catch on. In 2020, 2021, I was calling for $250 plus oil. A lot of people told me I was crazy. Their interpretation of me saying that, because I said it was going to happen in this commodities bull market. I said late 2020s, we're going to go greater than 250 oil. And a lot of people said, no, 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 no. They're like, no, that you're not going to get that. So, and then we have this pullback from 2022 to whatever, and that's when they're like, oh, you're wrong. And it's like, no, I said during the bull market, the big bull market started in 2020, and it will end in the late 2020s, early 2030s. That's my guess. It could even extend further than that into the future. That was my guess when we first kind of started that. Copper is going to be north of $10. Peabody Energy, an odd chart that produced a 40 bagger from 2020 to 2022. So here's the charts, Peabody Energy. They're showing that one, and he's saying a 40 bagger potential in that. Good thing we're already in it, and we bought it at this bottom. On the website, we bought this right at the bottom. I'm just sharing this because he's got this posted here. We bought it right in the 10, 11, 12, $13 range, $14 range. This one here is copper futures, breakout, back test, and then the big move higher. So he's looking at the big picture view just like I am. And he's looking at fractal patterns and the big moves. So I think he's very close to being dead nuts right. Dead nut right. Here is oil. And again, we've got that squeeze on top of the consolidation. And we are going to break out at some point. Don't be afraid if this dips below. That's a washed out slingshot move like this one is. Wash out slingshot move upwards. So if we get a slingshot, accept it, use it to your advantage. And then this one here is crude oil on the long-term logarithmic, because I post this one a lot too. There it is, ready to go. And it's very similar to this move right in here. So this is a 3-hump consolidation, just like this hump consolidation. You draw a line going across here. This is your breakout retest, breakout retest. It's very similar. We're right here before a big move higher. Grady says, posted before the generational breakout for platinum that the breakout was coming. Means the secular bull market for platinum has resumed. Been posting since 2020 that platinum will outperform both gold and silver in this bull market. Do not miss the historical platinum palladium bull market. Many have started to wake up to platinum and palladium and say they saw it coming, which most of them did not. Of course, I partaked in it. It has some of that. So this is the platinum. We've broken out. It's the secular bull second leg. We are ripping higher. We are in the move. Bullish MACD cross. Everything is looking good. Generational breakout opportunities there and here. For AM freight futures updates, dry bulk, Capesize, and Panamax are both down 2%. Tankers, VLCC is down 5%. Suezmax is flat. We got another cup and handle pattern on silver. $1,300 silver. Sounds crazy, but the extended move says otherwise. Yes, it's a nuclear target. Yes, plenty of bombs along the road. First likely around 50 to 55. As always, silver's a marathon, not a sprint. I've actually said that before. This is silver divided by the S&P, or S&P 500 divided by silver. Are we in 1967? This could be a super capital rotation event. And are we here where we're just starting to break down, very similar to 1967, right before that big bull market in precious metals and commodities? Yes, I do think that could be the case. And our commodity to stock ratio agrees with that. Yes. And again, Grady and his opinion on the silver breakout on the quarterly chart here. Yesterday was the last day of the quarter. It means that silver has now broken out above the 45-year cup and handle pattern. My target since 2019 is $370 plus an ounce. So it begins. It begins. And that's all I've got for today. So we're going to end it there. Give me a thumb up for the content. Subscribe to the channel. Subscribe to the website, especially with the coupon code. And that's all I've got for today. We've got a Q&A session coming up this weekend, Sunday at 5 p.m. Mountain Time. All right, guys. See ya.